Welcome back to Investing Talk Podcast.
Today, we're looking at a company that has effectively decided to stop digging for gold and start building a central bank vault instead. We're talking about Bitmine Immersion, ticker BMNR.
And I think we need to be clear right off the bat here.
Yeah.
If you still have this filed away in your brain as just another Bitcoin miner, with racks of servers humming away, you are looking at the wrong business model entirely.
Completely. They're attempting something that is, it's a high wire act in the crypto market.
It's definitely not a boring mining play anymore. I was reading through their strategy, and they use this phrase, the alchemy of 5%. Sounds so dramatic. It's almost like something out of a fantasy novel. But when you look at the actual numbers, they are talking about a goal to control 5% of the entire circulating supply of Ethereum.
Which is a massive market-moving amount of capital.
It is. And I think that's the tension we need to explore today. Is this a genius strategic pivot? Or is this a company that is quite literally betting the farm on a single, highly volatile asset?
That's the question.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep these analyses coming.
So let's strip this down. Why does a mining company decide to stop mining and just start hoarding? Because if you look at the 8K filings from January 2026, that is effectively what Bitmine Immersion is doing.
They're pivoting.
From an industrial operation to a treasury operation.
Right, and I think we need to define that distinction because it changes how you value the stock completely. A traditional miner is like a factory.
Yeah.
You worry about electricity prices, hardware depreciation, all that stuff. You're selling a commodity to pay the bills. BMNR is saying, no, we aren't a factory anymore. We are a bank.
Exactly. They are positioning themselves as the #1 Ethereum treasury company, and they're what we call a fresh money buyer.
Meaning they're not just sitting on old coins they mined in a garage in 2016.
Not at all. BMNR is actively in the open market right now, raising capital and buying ETH. But the alchemy part, the part that makes this a business and not just a digital wallet, is what they do with it once they have it.
Okay. This is where the skepticism kicks in for me. Because if their plan is just buy Ethereum and wait, why do I need to buy their stock? I can just go open a Coinbase account and do that myself.
Fair question.
Without paying for a CEO and a headquarters and all the legal fees. Where is the actual value add here?
That is the multi-million-dollar question. And the answer is, in 2 words, ecosystem services. Specifically, staking.
Okay, so staking. Let's break that down for anyone who might just know about Bitcoin mining.
Please.
Bitcoin uses energy to secure the network. That's the industrial part. Ethereum, it uses capital. You lock up your coins to help secure the network, and in return, the network pays you interest.
Precisely. It's like a government bond, but for the internet. And BMNR is trying to build a bond portfolio the size of a small country's GDP.
So they aren't just letting the coins sit there.
No, they're generating yield. They are targeting something like a 4 to 5% annual return on that treasury, paid out in more Ethereum. So they are compounding their position automatically.
So if they hit this 5% supply target, they aren't just holding the asset, they are actively growing it from within. But they haven't abandoned the physical world entirely, have they? I saw mentions of Trinidad and some sites in Texas Pecos and Silverton.
No, they haven't. And that's smart. You still need infrastructure to run the validator nodes for staking. You need servers, you need reliable uptime, and most of all, you need cheap power.
Which you find in Trinidad and West Texas.
Exactly. It keeps their operational overhead low.
Yeah.
But the revenue engine has totally shifted. It's no longer mining reward minus electricity. It is now treasury yield minus management fee.
Which brings us back to that alchemy of 5% idea.
Yeah.
Why 5%? Is that just a big round vanity number? Or does something fundamental change when you get that big?
Size creates gravity. If you control 5% of the total supply of a global asset class, you aren't just a participant anymore, you're a market maker.
You get network effects.
You have liquidity advantages that smaller players they don't have. You become too big to ignore.
Okay.
And that opens up doors for what we call DeFi optimization. At that scale, BMNR can engage in complex yield strategies, lending, providing liquidity, arbitrage that a retail investor can't even dream of.
So they're building a moat made of money. But I have to look at how they're building it. I was digging through the recent financing rounds, those filings from mid to late January. They are raising equity aggressively.
They are printing shares. There's no sugarcoating that.
Right. So they're issuing new stock, taking investor cash, and using it to buy Ethereum. They aren't paying dividends. They're not buying back shares. They are diluting me, the current shareholder, to feed the treasury.
It is the classic growth at all costs dilemma, but with a crypto twist. They're focused on one single metric, ETH-per-share.
And their argument is what? Yes, we're diluting you, but
we're using that money to buy an asset that we believe will appreciate faster than the rate of dilution.
So it's a race. If they dilute my ownership by 10%, but the value of the Ethereum per share goes up by 20%, I'm still winning.
That's the bet.
Right.
But it requires you to believe two things. One, that Ethereum is about to put in a massive rally. And two, that their alchemy, the staking, the financial engineering, adds enough value to justify their existence.
It's a bold claim.
Yeah.
Let's pivot to the charts and see what the price action is telling us. Because fundamentally, the strategy is aggressive, but the market doesn't seem to be throwing a parade for them just yet.
No, quite the opposite. If you look at the technical indicators, the short answer is the market is terrified. The context here is extreme fear.
I see that. The stock has been beaten down. But we always hear that Buffett quote, be greedy when others are fearful. Is this that kind of fear, or is this run for the exits fear?
It looks like a classic asymmetric setup to me. The stock is signaling what traders call a capitulation bottom.
Capitulation. That's when everyone who wanted to sell has finally given up and sold, right? There are no sellers left to push the price down.
Exactly. It's psychological exhaustion. The price has dropped so much, largely because Ethereum itself has been lagging. And because BMNR is so tightly correlated to the price of ETH, it has taken a severe beating.
But do you think this creates a kind of coiled spring effect?
I do. Look at the basing pattern on the chart. The stock has effectively flatlined at these lows. It stopped making new lows. It's just waiting.
Waiting for the trigger.
The trigger is Ethereum. If ETH wakes up and moves 10%, BMNR doesn't just go up 10%. Because of the leverage and the sentiment shift, it likely explodes upwards.
That's the high beta argument. You buy BMNR for Ethereum exposure on steroids. What about the big money? Are institutions stepping in here?
The volume is stabilizing, which is a good sign. The chaotic selling seems to be over. We aren't seeing massive, public whale buy orders just yet, but there is implied interest.
Implied how?
Through the options market and some leverage strategies, we're seeing a repricing in risk metrics that suggests smart money is positioning for a rotation back into Ethereum. When that happens, the first things to move are the proxies, like BMNR.
So the technicals are screaming oversold. It's ugly, but it might be the kind of ugly that opportunity looks like.
Well put. It's ugly, but the risk-reward ratio is heavily skewed to the upside if you believe the underlying asset isn't going to zero.
The charts show fear, but let's check the pulse of the market, moving to sentiment.
And here is where it gets really weird. We ran the quantitative sentiment analysis, crunching news, social media, everything, and the score came back as a flat 0.
0. Not negative, not positive, just a void.
Dead neutral. A perfect 0. That is incredibly rare, especially for a crypto stock. Usually it's all love or all hate. A 0 tells me the market is just confused.
I don't know what to make of it.
They don't hate what BMNR is doing, but they are terrified to love it yet.
Let's look at the headlines driving this, because they really paint a picture of that confusion. We have one from late January. Bitmine Immersion. Extreme fear, asymmetric setup.
That perfectly captures what we just talked about. It acknowledges the fear, but it highlights the math. It's a conflict between emotion and logic.
Here's another one that made me chuckle. Bitmine Immersion. Focus on staking yield, not Mr. Beast.
Right. And that's actually a really important signal. The crypto space is just plagued by celebrity endorsements and hype. This headline is telling investors to ignore the circus.
It's saying this isn't a meme stock.
Exactly. BMNR is trying to be a boring, yield-generating financial business. Look at the cash flow, not the celebrity tweets. It's basically saying, we are grown-ups now.
And then there's the elephant in the room. Headline number 3. Betting a farm on Ethereum is risky.
And that is the bear case in a nutshell. It encapsulates exactly why that score is 0. Investors look at this 5% target and think, wow, if this works, they become the Federal Reserve of Ethereum. But if Ethereum fails, this company goes to absolute 0.
There's no plan B. They aren't selling software or widgets.
Correct. So I'd characterize the mood as neutral with bullish undercurrents.
Bullish undercurrents.
Yes. The surface is calm, maybe a little fearful, but underneath, people are watching this aggressive accumulation. No one wants to be the first one to buy, but absolutely no one wants to be the guy who missed out if the alchemy actually starts working.
It's a standoff. And I noticed there aren't many analyst upgrades for 2025 and beyond. Wall Street is quiet.
Very quiet. The analysts are in wait-and-see mode. They want to see the company execute before they stick their necks out with a buy rating.
It sounds exciting, but we need to look at the downsides. Let's dig into the risks. Because betting the farm is a catchy headline, but it's also a terrifying strategy.
It is. And risk number one is exactly that, concentration.
We touched on this. If you're an oil company, you're concentrated on oil. But oil has intrinsic value. Planes need to fly. Ethereum is, well, it's code.
It is volatile code. If the price of ETH crashes 50%, BMNR stock probably crashes 70 or 80%. That is the reality of the leverage here.
They are an ETH proxy. If the asset catches a cold, the company gets pneumonia.
But I'd argue that's priced in. That's what that extreme fear signal tells us. The stock is already trading as if a crash is a real possibility. And you have to remember the yield.
The 4 to 5%.
Right. Even if the price of ETH goes nowhere for 2 years, they are still earning that staking reward. That provides a cushion that just holding the coin in your own wallet doesn't have.
Okay, let's go back to risk number 2, dilution. They are printing shares to buy coins. As a shareholder, is this sustainable?
That is the classic objection. The company's defense and the bull case is something called premium issuance to NAV.
Explain that concept, premium to NAV, like I'm 5.
Okay, imagine a company owns $100 worth of gold. That's its net asset value, or NAV. But the stock market is excited, so the company's shares are trading at a value of $120.
Okay, so there's a premium.
The company can issue new shares at that $120 price, take the cash, and go buy more gold at the market price of $100. They've just used the market's excitement to increase the amount of gold per share for everyone.
So they're basically doing arbitrage, selling expensive paper to buy cheaper assets.
Exactly. And as long as the stock trades higher than the value of the Ethereum they hold, printing shares is actually good for you. It's accretive.
But, and this is a huge but, it relies on the stock trading at a premium.
Precisely. If sentiment sours and the stock trades at a discount to the assets, the whole strategy falls apart immediately. You get hit twice. A smaller slice of a smaller pie.
That is a very delicate math equation. Let's talk about risk number 3, policy uncertainty. The Fed rates are steady, but why does that matter for a crypto company?
Because money has a cost. When interest rates are high, safe money can get 4 or 5% in a treasury bill. Why would you risk it on Ethereum? High rates suck liquidity out of speculative assets.
And what about the regulatory side? Staking isn't exactly settled law.
Far from it. There's an ongoing debate in the U.S. about whether staking services are an illegal securities offering. If the regulatory winds shift, their entire yield model could just evaporate overnight.
So they're betting on the price of ETH, and they're betting on the regulatory framework staying favorable.
It's a multi-layered bet. You have to get the price right, the execution right, and the politics right.
We've weighed the mood against the dilution. It's time for the verdict.
This is the hard part.
First, catalysts. What are we watching for in the next few months?
The big one is earnings, expected late April 2026.
That's coming up fast.
It is. And you can forget about traditional metrics like EPS or revenue. The market is going to look at one number and one number only, ETH holdings growth. Did they get closer to that 5% target?
So if they report a 20% increase in their ETH stack, the stock probably moves.
That validates the entire strategy. It proves that the alchemy is working.
Okay. Drumroll, please. What is the bullish score?
I'm giving Bitmine Immersion a 7 out of 10.
A 7? That's solid, but it's cautious. It's not a table-pounding name.
It reflects the asymmetry. The upside is massive. I mean, if ETH recovers, this is a multi-bagger. But the risk is existential.
So walk us through the final thesis, the elevator pitch.
The elevator pitch is this. BMNR is a leveraged call option on an Ethereum recovery. If you believe ETH is going back to all-time highs, this stock is a rocket ship. Their alchemy of 5% strategy gives them a real moat that standard miners just don't have.
So this is not a stock for your grandma's retirement fund?
Definitely not. Don't put your rent money in this. This is a swing trade leading into those Q2 earnings. You buy the fear now, while everyone is terrified, and you wait for the validation in April.
In longer term.
If they actually hit that supply target. If they get anywhere near 5%. This could easily scale into a multi-year hold. The cash flow from the staking yield would be undeniable. They would basically be a massive dividend machine just paying in crypto.
So it's high risk, high reward, specifically for those betting on an ETH comeback.
That's it. You are paying for the leverage and the yield. If you just want safe exposure, buy an ETF. If you want to try to outperform the market aggressively, you look at BMNR.
It's a fascinating pivot. From mining blocks in a warehouse to building this this treasury fortress.
And that's the unique value proposition. You gain exposure to those ETH yields without having to figure out how to set up your own validator node or manage private keys. You outsource all that technical complexity to them.
Which, for a lot of institutional investors who can't hold keys themselves, is a service worth paying a premium for.
It absolutely is. It's the bridge between traditional finance and the crypto protocol layer.
That's it for today's deep dive. Don't forget to subscribe, like, and comment to support the show. See you next time.